I don't scalp Forex. If you're new here, my name is Chops. I'm one of the founders of Not Just a Trade. When traders see me trading the 1 minute chart, they assume I'm scalping. Well, today I'm going to tell you that I do not scalp Forex, and you might want to reconsider scalping too. Instead, I'm going to introduce you to my method of trading the 1 minute chart with high precision using the RMC method to catch significant moves in the market that equal to large profits. So let's dive in. Now, while scalping can be exciting and seem profitable, it comes with its downsides. Firstly, it requires consistent attention in the markets. We need to be following each and every single one of these candles and hoping for us to be in the correct direction. It needs fast decision making, which can be mentally exhausting, but secondly, you're aiming for small profit margins, which mean you need a higher win percentage. If we take a look at these risk to reward profiles, the average scalper is looking actually at negative RR. They're actually looking to risk more than they're willing to gain to be in the right direction to have that high win percentage. Then you've got the other scalpers that are looking to have an RR equal to their risk, and they are not accounting for spreads and commissions. And lastly, for scalpers, their frequency of trade is really high. So just in this one bullish move here alone, they're likely going to be trading many trades in many directions. Let's say they were short here, likely they're still taking short and they're still trying to scalp the market. This will lead to increased chances of making mistakes due to emotional stress and technical errors. It's quite natural for traders to make mistakes, but if we're executing this number of trades in a small time window, that's a lot of exhaustions for the trader. The idea of scalping is to accumulate small profits multiple times throughout a trading session. And let's be honest, this is going to require a really intense focus. You're going to have to be making those decisions really quick on what you should be doing, what direction you should be trading, when to TP, when to move to break even. And you're doing that over multiple trades. Even holding trades, looking for the extension in price, you're still managing multiple trades that are open. And often you need a substantial amount of capital to make it worth your while. Or if we know that scalping can be time consuming, it can be stressful, and we're on the lower end of risk, knowing that in order for us to be profitable, we need to have a high win percentage, we realize, here's the thing, scalping isn't for everyone, and it's definitely not for me. Let me tell you why. So I don't scalp because I prefer to take a more strategic approach and less stressful approach to trading. Instead of looking for those tiny quick gains, I focus on high precision trading the 1 minute chart with higher risk to reward ratios, letting price run into much bigger profits. And what do I use to do that? The RIMC method. Now, RIMC stands for Range, Initiation, Mitigation, Continuation, and it's a system that allows me to identify only higher probability trades with minimal risk and looking always for that significant profit potential. So guys, if you are new here, be sure to subscribe, hit the like button and the notification bell, and be updated to what we do here. I'll be coming out with a lot more videos over the next couple of weeks, breaking down how I trade, going over trade recaps, and really giving you guys the insight into the RIMC method. So let's talk about this now. Range, initiation, mitigation, continuation. These are our processes. This is exactly what we're looking for. I'm using RIMC to only look for higher risk to reward opportunities, and I let price run into big profits. I'm not cutting trades early. And this way, if I lose a few trades, I know my winners will far outweigh my losers. And when we think about high RR, we need to really understand what that looks like. So here we have a trade that I've taken following this exact process of range initiation, mitigation, continuation. Now this is fractal. We can use this across all of our timeframes. And I really want to go over this example using the RIMC method. As you can see, this is one of our opportunities. And when we think quickly about what the RIMC method looks like, we're essentially saying that price is going to range, it's going to initiate in a direction, it's going to pull back and mitigate that location, and then we're going to see a continuation in that direction, taking that previous high. Now, this information is fractal. We realize that direction comes into the market using this process, and it's the RIMC method that we use to identify those higher probability opportunities. As we can see here, we do have that lower time frame sideways delivery. We do have a move to the upside. We have a slow move back, and we have that continuation to the upside. Let me quickly show you guys my latest reel on my Instagram where I break down this trade in detail all the way to take profit. Only floating around 1.5%. And we can see here, here's a position, right? Range, initiation, pulling back into that point of mitigation. This is where I execute the position. And we can see we move off into higher prices, looking for London highs to be taken from this initiation. Let's quickly talk about this trade. So yesterday we had that range initiation to the upside. We can see that is a different intention from that move down. So clearly there's a new intention in the market, and that's what we're playing. We're playing that bullish intention. So we see that initiation structure. We see price pull back into that 50% location, still high within this A to B, but we can see that price for our session started to range. Coming into London session, we can see price was moving from the high into lower prices. So it's this location that's high probability to look for longs. Price was moving and initiating into this location. We ran the low, we slowed down, and then we initiate to the upside, and we see the slow pullback. So this is a lower time frame range, initiation, mitigation. And with mitigations, we like to see continuation in that direction. And that's what we're currently getting. Now, continuation phases are fast. They move with impulse. And that's what we're currently seeing now. So I suspect that across our timeframes, we'll start to see large candles print all the way to the high. And we know that because we come from a mitigation and our framework says mitigation, continuation. So that's the expectation to go and take London's high. But I'll update you guys on what happens next. Now back into the video. And when it comes to placing my position, essentially what I'm trying to do is place an entry at the mitigation. I'm putting my stop below the low, a minimum of 2.2 pips that I use. When we're looking at that risk to reward ratio, we can clearly see that a 1 to 10 would be a positive ratio and a high risk to reward. We're risking 1 to make 10. This accounts for commissions. This accounts for losses. This is really a huge edge for our sustainability in the markets. And what do we see? The result of this trade, a full 1 to 10 hit on this position without needing to scalp and be in both directions to try and make a small gain out of price. Remember that when we're scalping, we need to be right the majority of the time. Whereas if I'm placing a few trades a session, looking at the 1 minute chart using the RIMC method, then there's a high chance that I'll be able to catch large moves like this and capitalize on those big market moves without needing to be on the screen all day. You can see this trade was taken in London session. My session is actually 8 till 10 and I trade a 2-hour window. And we can see here, this trade comes exactly at that time. And the beauty of using this method, it gives you the best of both worlds, precision and profitability. And the best part, you don't need to be chained to your screen all day with constant stress and pressure of scalping. One trade, one high ROR target. We're using a process with high precision. Now we can be a part of these opportunities. If you're interested in learning more about the RIMC method and how you can start trading like me, I've put together a comprehensive guide that will walk you through each step in detail. Make sure you check out the link in the description and give the RIMC method a try. Thanks for watching, guys. Don't forget to like, comment, and subscribe. I'll catch you in the next one.